Starting the recording now. Hey guys, happy Tuesday.
All right. Hello. Happy Tuesday. Thank you, Scott. Hello, Mr. Andy.
Hello, Steve and Scott and everybody out there. Glad you joined us.
All right. Usual crowd and maybe some new names as well. Can't believe the week is marked once again. Here we are, 5 o'clock Eastern on a Tuesday. It just seems like the weeks go faster and faster. So this is the trade of the week where we talk about the actual trade of the week that went out in email yesterday. That's kind of the theme. We do talk about a lot of other things. And well, let's get started. As usual, the first slide of the day is the disclaimer. Lawyers like it when we remind you all that we are a software as a subscription service type of business model. We're not a registered investment advisor. We haven't taken the tests to give us the fiduciary relationship with you guys. So therefore, you can't construe any of this stuff as financial advice. If you need financial advice, you got to go to the people that charge you a fee for a reason, and then go to lunch and play golf on that fee. So we've been around since 2003, roughly. I'm one of the original users, number 3 in the system. And Andy is, I think, number 30 or 40. We've both been here since the beginning, and we've seen a lot of changes since 2003, 2004, when it was officially released. So we're talking 14, 15 years worth of technology that's just layered on top of the original architecture with new versions all the time. There's a lot going on there, and that's where I'm getting with this. And we understand that's not easy to grasp the entire program in just a few days, so we have a lot of concierge type onboarding services that are free to get people up to speed as quickly as possible, primarily Barry's trading room. He has about 400 or 500 people every day in the live trading room at Trade Ideas, where he shares his desktop, answers questions about the product, and lets a few of the people in the room kind of take the lead each day to hunt the market, to like a pack hunting environment. And it's a great place, considering other places that are just as valuable, maybe not quite as valuable as Barry. I don't know how Barry does it. He's born to do this kind of stuff, but those rooms might charge money, and this is a free room, so free is always a good price. So we have that bell to bell on Monday through Friday. The afternoon webinars, I helped Jamie yesterday, my webinar today, and Dan and Brad do some webinars on Wednesdays, and then Andy finishes off Thursday afternoon, 5 p.m. webinars with the trading studio. Typically talks about what happened on that day and what's going on. And then Friday support, we don't have any content type webinars like we do Monday through Thursday. We have an open forum. And if somebody is looking for assistance, this is the place for you. I mean, we're open 3 hours. You can stop by anytime during those 3 hours if you're able to, and let us demonstrate any question you might have or any assistance you might need in developing something or working through our system. And it's a great recurring 3-hour, 11 to 2 Eastern Friday support session is what we call it. You guys can show up and just tell us what you need to talk about, and we'll demonstrate what's needed. All 4 of us are in there, Jamie, Sean, Andy, and myself. There's a lot of knowledge to be given out. And then lastly, the TI University, I just did the 201 class this morning. Every noon, Monday through Thursday, we start over each Monday. And the beginner class, it's interesting. Andy can attest to this. We have a big crowd on Monday, and the crowds start to slow down as we get into the more intermediate stuff on Thursday. Advanced stuff, I should say, on Thursday, but nonetheless, it recurs every week. It's not an evergreen webinar. We are there to speak live and answer questions as well. So Monday through Thursday, TI University, you don't have to be a subscriber. It's a great way to come in and kick the tires and see if it's something that you do want to subscribe to. All right, so brings us to our theme and start the webinar for the week. It's man and machine, as always. Just a reminder, the new world we're going to be all living in is a world with a lot of really smart AI, and especially when it comes to large data sets. People are going to have to find some new jobs, I think, in Manhattan in the next 5 to 10 years, perhaps, because the AI is really good at working with large data sets. And so my point is, the human, the man, and the machine combined are really where the strength is. It's not just one or the other. And you don't really want to let the machines run everything and turn your back on it. We want to have the machines give us the best curated list of ideas or concepts, or whether you're an oncologist and you're looking for a cure, or whether you're a sports bettor and you're looking for an edge, there is going to be a lot of new fun stuff to play with, and it just brings the data to the surface and lets us, the human beings, use the data set to curate a simple, decision process and move from there. That's how it's all going to work. And so Trade Ideas has really kind of been ahead of its time. Even before the AI came out, it's a way in which we can parse a giant data set, which is the market. When the bell rings, there's just nothing but data and numbers and information flying around at breakneck speed, like data through a fire hose. And Trade Ideas is able to kind of contain that and corral it and bring to the surface, whether it's something we designed customly or something the AI finds of interest, and bring it to our attention. And then we can decide whether we want to act on it or not. And that is the idea behind humans and machine combining for the whole power. So we're going to stick with the theme as we kind of do every Tuesday. I'll have a little market recap. There's certainly much to talk about in what happened in the market today and yesterday. Hourly recap, pretty good day for the AI. It was definitely showing us the path of least resistance today, but I won't spoil any of Andy's thunder. There's tons to talk about there. The trade of the week, a lot to talk about on how this one was derived. Lyft hasn't been a real menace. It had a good move yesterday and gave a little bit back, but we'll talk about that and look at the price action there. A sector glance was interesting last week, and I think it deserves a certain glance again today, considering what we're going to talk about here in the market recap. We'll take a look at a few of the alerts that went off last week. Surprisingly enough, we decided to start setting a few short selling alerts, and they did pretty well. We'll check in with those and even set some new ones that I've got. So, and time permitting, we'll see if we have any chart requests, but we'll play that by ear. So let me grab my daily chart here, the S&P, and boy, if I go back one tick yesterday, here I know. Trying to get too tricky here. There we go. This is what Jamie and I were looking at yesterday. Just a horrific plunge that broke below a lot of pivot levels and 2 days of close below the 200-day, which is a really pretty big deal. And then wow, 1 day. Look at that. When you have a downtrend or a minor downtrend like this, and you have an exact, not a gap down, that's kind of what we would expect. A lot of gap downs here and on the way the last few days, definitely big gap down here. But when we have a market that's leaning one direction, it's almost like a crossover dribble, Andy, right? Here's the defender looking, and boom, the market gaps up the other direction and surprises everybody. That's called a pro gap, and pro gaps are pretty serious. They can be the beginning of something. So I'll just start off by saying that. What a difference a day makes in terms of the damage that was done yesterday in the markets as we closed and broke below the orange line, which is a pivot level I've talked ad nauseum about. And boy, what do you know? Not to get ahead of myself, but we pro-gapped up and just rallied all the way into the end of the day, where waiting for it was the underside of that orange line pivot, as well as the key 10-period moving average, which we know has been interesting as of late, as it's been kind of holding the price down. Well, today, once again, not only did the pivot line here, but also the 10-period moving average held the price in check. Kind of what you would expect midday if you're looking down and saying, well, if this thing grinds higher all day, this is probably where we could expect to do. Look at a daily chart and see where the possible daily target is. So from here, where do we go? I know Andy and I both kind of agree it's quite possible tomorrow we could have something like this, a day of rest, which basically means what the hell just happened here with this next snapping pro gap going the opposite direction. Maybe there's follow through. I can't rule it out. There could be another tall green candle, but more than likely, when we see this kind of a neck snapping move or a big move in one direction, the next day is kind of a day of rest to kind of say, okay, what happened here? Who's going to win this fight? What's going on? If we don't have this, I'll be rather surprised tomorrow. But I'm not saying we're going to have it. I'm just saying there's a lot of resistance that we just ran right back into. The volume on the sell-off was greater than the volume on the bounce today, but nonetheless, still. Yesterday I was a little bit, I was saying, well, the bulls don't have a whole lot to cheer about, but that was before the giant gap up in green candle today, right back into the ball game. They're not out of the woods yet. I mean, I see also kind of a channel developing here, perhaps. So, but you can see this is a major inflection point because we've been talking a lot about this orange line pivot, which we even went to the, let's do that as well. Let's go to the weekly chart and show you how significant this pivot line is. So here was the 3 tips back here that we drew the line off, and if you keep going left even more, wow, look at this. Back in March of 18, it was also a level that was kind of a pivot point. So this pivot point, this level, we'll call it 280 roughly in the SPYs, has been very significant for a while now up at these levels. So that's one way to look at it. We'll see what happens. Again, we're on the weekly chart and we can see we're right up underneath it. Well, we got 3 more days in this week to complete this candle. Let's see what happens. There's 2 things obviously that could happen from here. We could look at this in hindsight in the weekly and go, oh, that was a nice looking weekly cup and handle. But we're far from talking about getting back up here to this range because just one day is not a giant reversal going to make in terms of having confidence, back to the daily chart here, that this is going to bounce back out of this downtrend we're in. So the significant points are a lot of damage was done yesterday, but a giant reversal. Let me actually go inside. Jamie and Michael and Andy and I are talking a lot throughout the day. And here was our gap up on the 15-minute chart. And right about here, I kind of whined to the guys a little bit like, okay, so gap up in doji, huh? That's what it's going to be. Then I noticed Zero Hedge on Twitter. If you're not following Zero Hedge on Twitter, you should if you're on Twitter because you're going to get a lot of great free news and headlines dropping quickly when they do. He started dropping in capital letters all the stuff Fed Governor Powell, Fed Chief Powell was talking about. And he said, oh boy, okay, so I've seen this game before. I mean, we can talk about how much Steve likes to enjoy price action, but what was happening in real time here was, Powell was kind of propping up the market. That's what they do lately. It seems like they didn't do it 10, 20 years ago, but ever since the financial crisis, it seems like the Fed has gotten real good at finding a microphone and a camera when it needs one. And this is what happened. As soon as I saw the Fed Governor Powell talking, Fed President Powell, whatever his position is, I can't even think of it offhand, we got this, the all clear. Hey, we got your back, market. We're now watching closely, and if we need to cut rates more, we'll do so. And you can actually see it in real time where it developed. The market gapped up, had no idea what to do with itself, and then Powell jumps on a microphone, and then we're off for the races. So that's kind of really the story of what happened today in terms of why the price action did what it did. So here we are. It's going to be an interesting week to see how it resolves. Again, I wouldn't be surprised to see if we see something like this little day right here, a little doji with an upside and a downside and kind of close where we open, because this is a significant level and we did have a significant move off the bottom. But on the plus side, again, when you gap in the opposite direction as the prevailing short-term trend was, that's called a pro gap. And you don't want to take those lightly, is what I wanted to really say. Other than that, let's go over to the NASDAQ. I mean, it's going to be the same story over there. NASDAQ was, well, before I do that, we reclaimed the 200, very important. We were down below the 200-day for a couple days and we bounced back up above it. But just like before, okay, that hurdle's cleared. What's the next hurdle? Well, it's going to be this pivot point and the 10 period right where we closed today. Not really surprised. NASDAQ, same story over there. We had 2 days of a hideous, ugly closing. And we noticed this yesterday as well. Look at this. We tagged this level back here. I'm going to go back to the SPY, and that respective low is right there. We did not quite get there yesterday. We were close, but we didn't get there. I'm going to delete that line. But over in the NASDAQ, which has literally been leading us higher, and so we have to pay attention to the index that's been leading us around by the nose, NASDAQ actually did tag that. Did you catch that, Andy?
I did.
Yeah.
I did
so
not.
Interesting.
Yep.
Bidders were laying in wait. That's why we always say take a daily chart and look left. And looking left was a beautiful bounce yesterday. And if anybody decided to jump in and buy an oversold swing trade bounce, they were handsomely rewarded on the open. But let's go to the close, right back above the 200-day over there as well. So both of our key averages, the NASDAQ and the S&Ps, spent only 2 days underwater under the 200-day and quickly reversed. And again, I'm not calling it. This very well could be, a reversal type event that in the same scheme of things, if we go over to the weekly chart, we could look at this in hindsight as, was this kind of a cup and handle event? Could be. That's a really nice looking weekly bottoming candle. If this thing can dig in and hold, that's extreme. Let's get to Friday first. We don't want to get ahead of ourselves on weekly charts ever. Right. But if this is the way the market goes out and looks like this on Friday, maybe with even a bit more green under, that's going to be pretty not bullish, but pretty solid. Pretty solid, I would say. So we're on the NASDAQ. We'll go back to the daily. point of reference, you can see how quickly we got underneath the momentum, really started to accelerate. When you're underneath that 10 period and you have all this space in here, underneath the 10 period moving average on the daily chart, you're talking some serious momentum. That's a lot of daylight in there for the most part. So I guess the big question mark is this going to be a relief bounce, or is this the beginning of something? You know, maybe a couple of small doji days to build on and see where we go into the week. That's all I really got for the NASDAQ, I think, in terms of points of interest. It was due for an oversold bounce for sure. Let's take a look at Deutsche Bank real quickly, because that really helped. Probably one of the reasons the market bounced yesterday. If this is the 50 period and this is the 20 and this is the 10, Andy, the price action of Deutsche Bank became like a 5 period moving average on its own. I mean, it was just a super fast, unbelievable momentum. Because I was talking about daylight. You know, when this much daylight occurs, you know, between a momentum average and the price, you're just waiting for this kind of an event. And so, just trying to illustrate, it was an oversold event that certainly happened today, and a lot of short covering certainly got caught. The Dow cannot get back above the 200-day. That's a bit notable. It spent 4 or 5 days below the 200-day, but could not get back above it today. And then the lagging IWM, I know, is going to be nowhere near the 200 because it's been below the 200 for a few weeks now. But it had its own nice respective bounce candle. So bounces across the board, but to me the most significant one was the S&P as usual, because it bounced and stopped and found resistance right here where we would expect it to. So tomorrow, the big key is if we don't see I'm expecting a narrow range day tomorrow. You hear the word to go, pause, go. You know, that's kind of where it comes from sometimes. After a big candle, the following subsequent day can be kind of like, all right, let's slow things down here. Who's really in control? What just happened? And then we can key off that candle perhaps on Thursday, but I don't want to get too far ahead of myself. So that's all I see for the market recap, unless you got something you want to add.
No, you covered it really, really well. I mean, we still have those downward sloping 10 and 20, and they've crossed through the 50, so there's definitely some work to be done, just like Steve mentioned, for the bulls. But a nice start. We'll see if they can build on it. And I totally agree with Steve. Without any maybe macro news from tomorrow, we're very likely to see a kind of an inside doji day. But we'll see. We'll see. But no, you hit it.
All right. Well,
all right.
Tell them about Holly and the direction.
Yeah. What about Holly?
Let's
change presenter here, and let's talk about Holly. All right. Well, first, gosh, I mean, I don't know where to start. There were so many good trades today. I say trades, alerts, I should say. Holly, I guess Holly is trading for some people, but when she initiates these signals in our software, she's only giving alerts. But first of all, I want to take you through, let's start out with Grail here. And you can see Grail came to play today with close to an even number. Well, he had 5 long strategies and 3 shorts, and she fired off, you know, a limited number, only 7 trades today, all longs. But as you can see over here, gosh, in the risk on profit that I have, a lot of good trades. I'll come back and go through some of these here in a minute. There's a lot we can go through, and we will go through several of them because there was some really good trades today. But I want to point out first, okay, what was the direction of Holly today? Longs. Okay, let's take a look at 2.0. Came to the court today with a majority of longs. Looks like about what is that, 7 longs and 2 shorts. She did attempt two shorts a day, and they were both losers. Okay, but still, look at, that's 19 trades, so basically 10% short and 90% longs. Let's take a look at NEO. She came today with 5 longs and 1 short strategy and nothing but longs. So guys, I know how traders think, and I promised you today, when the market gapped up with the tape that we've been in, you know, over the last couple of weeks, a lot of people were thinking, oh, I'm going to fade this move. I can promise you, I know how traders think. For one, I'm one where I was like, you know, I'm not going to do anything, but you know, I'm definitely going to be, you know, looking to fade, you know, that first opening. But look what happened is, guys, we gapped right to the 200, And really, like Steve was saying, we traded sideways for 45 minutes. And regardless of Fed speak or whatever the reason is, you can see we popped right out above the 200. Once we really broke this area right here, you know, range break, as Jamie always loves to call it, we had basically we were above the 200, and really I said to myself, you know what, there's a really good chance we go to the fast line, because there wasn't a whole lot of resistance over here, guys. You had a couple of levels in here, but no real resistance. Maybe one could argue there's some right here, but really once it got to that point, it was kind of destined to go ahead and make that, and that's right close to the 200 anyway. So we reached our kind of our destiny today. A lot of times I like to call it in the spiders. But from the get-go, Holly was, if you were not trading Holly, at least you should have been paying attention to what Holly was doing. All of her strategies were lined up, and she was firing lots of longs. So that should tell you, you know, if you are leaning towards fading, maybe you should back away and pay attention to what Holly's doing. And not only that, you see her going all along in some of these incredible trades, you know, she was making. And we'll just start out right now. We'll since the market was pretty much up all day, let's just go ahead and sort it by risk on and take a look at some of these trades. Now, Sunrise Mover, Voyeur, if any of you guys are looking in at my window here and you're seeing these size of trades, 800, 541, 365, like how are you determining how many trades are entered? Well, if you go to tools, options, and
shares, how many shares?
Yeah, exactly, how many shares, trade size, you're gonna find that I have mine designed for, I want to risk $200 on the stop loss. Okay, so what the software does for you, it goes out and buys you the number of shares that would give you a $200 loss if it does go and hit the stop price. So let me show you an example to make it pretty clear. Okay, this Voya. Okay, let's click on it. All right, 52.75 was the entry. What a beautiful entry too. Stop price was 72.48, so that's 25 cents. So if we took 800 and divided it by 0.25, we're gonna get, that's not right, I gotta multiply it, what am I doing? 800 times 0.25, we are gonna get $200. So that's how this works. For those of you guys who are new here and you're wondering how these shares are calculated, I base it on this, the stop, how much I'm willing to risk on a stop. All right, but let's go a few more. The Voya, what a great one. You got a gap upper now, probably news. Earnings date was, what, 19 days ago. So you had a beautiful gap up, trade sideways, just like the market did. This pretty much, you know, the entry was there and then boom, never looked back, and look how it held the fast line, we call it, the 10-period moving average all day. That's an all-dayer. Holly got out on timed exit. This is where you can say to yourself, okay, Holly's getting out here. I'm gonna let this ride. Maybe I'll sell half and hang on to it. And look at that, just held the 10-period all day long. These are the kind of days you got to capitalize on. NHIQ, there's another one where Holly got out on profit save. I'm not sure why she did, because it really wasn't much of a pullback here. She entered right here, and I love this. There was no pain trade. She gets in, never goes against her, and boom. And on these great days, I always notice there are no pain trades. Citigroup. Now, I'm going to show you another one in 2.0, Holly 2.0, where she entered Citigroup a lot lower, around 64.13 or something like that. I'll show you here in a minute. But once again, then she came in Holly Neo and she entered it again. So a great trade there. I can go on and on. Another no pain trade, enters the trade, never goes against you and runs higher. Let's go ahead and look at 2.0. There's so much good stuff today. All right, there's Citigroup that I mentioned. She entered at 64.15, right at the open, and there you have it. And Steve, you were talking about that Deutsche Bank. It probably had a lot to do with these financials gapping and going today.
Oh yeah.
Yep. Kind of thing that you guys might want to keep on your radar. I would tell you to keep an eye on that thing. So today it gapped up and and so that probably helped the financials a lot. But what a beautiful trade there. You know, even though it did come below the 200-day, okay, you know, that's one regardless of what you did. You know, if you got out for the timed exit, you still did pretty well, but if you held on to some of it, you know, I know it's hard to hold on to the close of the day, especially in this crazy market we've seen lately. Take a look at Zine, see if we have pretty much another no pain trade. This one was at 848. So you got a couple of them real early from Sunrise Mover. When you start seeing these things fire and they're not going against her and they're doing well, you got to make good use of those things. There's another one, another no pain trade. Just a beautiful one there. Entry, and there's your fast line. Never.
You know what I was talking about a lot in the morning is that everybody wants to, you know, we all read the book, hey, to make money, you got to let your winners run and cut your losers quick. Well, letting your winners run is so much harder than it sounds. You see that money and you want to take it. But on days like today, and this is what I tried to really hammer home in the 201 class today with Holly, all three segments were showing us full risk on, no reason to get out, even though the AI was getting out for the risk off profits, the risk ons just kept outperforming all day long. And so in a bigger picture sense, when you look down and maybe you've got some longs and you're thinking about itching to take some profits and book those profits, you got to ask yourself, well, I mean, is there more on the table? If Holly wasn't doing what she was doing today, maybe not. But when it's staring you straight in the face like that, it's saying, boy, it's really, really working out for Holly to be holding on to these trades for the whole day. You might want to consider that too.
Yep, absolutely. Yeah, and you can see, guys, I mean, for the most part, in Holly Neo, you know, I'm sorry, Holly Grail, only 7 trades, but look at those winners. On risk on, every one of them made money today. I don't think I talked about this, but another beautiful trade. Gosh, just one pattern after, a lot of these patterns look like just like the spiders did today. They gapped up, traded sideways a little bit, then had a range break. And I think I've seen probably just, you know, 4 or 5 of those just going through the ones we looked at, you know, real closely here, but just impressive. And I'll tell you another one. I love these little trades, and I thought it would actually do better is this. I love when these get these things so oversold like this TIGR. I mean, it's on a death march. It's ugly, but look at yesterday at the close, how it ran up. Huge volume at the close. Look at that volume bar compared to everything else yesterday. And then, you know, you had a nice little, and I thought, boy, we'd get a lot more out of that one. Maybe tomorrow, I don't know. But I love those sometimes, even though, I mean, you're not catching a falling knife. When it's something like this, okay, when you've been, you know, you hear me call it death march all the time. Sometimes there's nothing wrong with catching maybe a little, you know, finally bar reversal, squeeze play or something like that, as long as you define your loss and, you know, and you get out when you're wrong. But sometimes those can be big winners, and I was actually expecting more out of that today. But Steve, I could go on and talk a little bit. Here's a stop hit right here in Skyworks. You know, just kind of ugly this morning. She took it a little bit too quick, the 835. Poor thing, had she been patient and like she did the rest of the trades, that would have paid, but it was a stop hit. All right, well, Steve.
Sure, I'll take it back, but sure. While I'm doing so, I can answer that question. Cedric, risk on is all the Holly trades all the way into the closing bell. Risk off would be the moment in time where the Holly exits the trade in the AI. For instance, real quick, looking at this first one, the risk off here in Citigroup was attained early on, and it was a smaller winner where the risk on value was higher. Here's another one in ZYNE. This is going to be the moment I'll show you right here where Holly exited. That's where the color gradient kind of changes, if you can see that. So that was the risk off moment in time. But then by the end of the day, again, risk off calculates all the way into the close. Well, $492 on my settings versus the risk off at 303. So on a day when risk off is winning across the board, and we can see that over here in these channel windows, risk on, full risk, same thing, risk on, that's telling us that it's okay. It might be in your best interest to try and really stay in these trades as long as you can when you see that. because we don't see that every day. And today was really screaming at us.
Yep. Nothing wrong with selling half. I mean, sell
Nothing wrong.
half and then see if the rest of it can run. Yep.
It satisfies the demons and makes it much easier, because really the biggest fear that we all have is the fear of seeing the money that's there at the moment not being able to be banked on and booked, because it might pull back and be taken away from us, and we all hate that.
Oh,
So
yeah.
you satisfy that emotion by taking half off the table, and then you feel like you can lose, at least on the other half. All right, so going forward here, I think we're just going to talk right about the trade of the week. Yep. All right. So going into the trade of the week, what did we have? We had a market that did not look like today. It looked more like that. This is what we had going into Friday. A candle that slipped off the ledge of the 200-day moving average and closed on lows. And I literally did tell Andy on Friday, I said, I don't know if I'm gonna see anything that we like. We're gonna have to call cash, because I'm afraid of, you know, just more downside. And Andy pointed out, he said, well, you know, I've been looking at Lyft, and I knew exactly what he was talking about the moment he brought it up. There it is right there. That's what it looked like on Friday. So our buy point would have been, you know, something like right there. Now, what we notice about this type of setup, and again, this is a new issue. We all know it's a new issue. This did not come off of a scan. This was, as written up in the article or the email, this was complete 100% discretionary from the guys at Trade Ideas this week. What we see is we see a stock that was rising and then kind of creating a little kind of a cup and handle. Now, Lyft had a horrible IPO. I mean, it lost a lot of value. So when a new issue comes out like that, it's a little different when you consider stocks that have been trading with the market for a while. So we go back to the SPY, and we had a horrible downturn for the last week and a half. I mean, this is what we were staring straight in the face of, a backdrop for the market to try and figure out a way to call a long-sided stock. And nothing really popped out on our scans, nothing really popped out on Holly, but, you know, again, kudos to Andy. He realized that the Lyft chart looked nothing like what the S&P was doing. Lyft had already had its beatings back here, and it was putting in kind of an inverted head and shoulders. This is a typical kind of a really nice basing pattern. And so in that respect, we just had to say, all right, let's just trust the price action and trust the pattern. Lyft obviously doesn't care that the market was selling off, and maybe we do get some sort of strength, and if it does trigger, maybe we'll get some follow through. So fast forward to yesterday, yeah, it did trigger. It triggered right where we, just above where we kind of, I'll do a markup on that one. So the orange line is the trigger. And I mean, shoot, yesterday, as the market was selling off and getting beaten, this thing was up 3 points at one point. So really nice alpha, at least on the interim in the morning. And then it gave some back in the end of the day. And then today, what we have to remind ourselves is we're looking at this as a swing trade. And there's a lot of noise. It's throwing a lot of elbows. To the upside, it threw an elbow yesterday, and then to the downside, it threw an elbow today, but it never really broke what we're looking for. That little bottoming tail wick didn't even come, and it got close, but didn't touch the 10-period moving average. We like to see nice closing bottoming tails bouncing off. So no harm, no foul. It's made a lot of noise in both directions, but it's still above our buy point. Let's see, is that a question regarding the trade of the week, or what happens if the candle line is continuously above but doesn't, well, as far as the 200-day moving average, Marguerite, you know, it's something that the big traders, the big fund managers look at. And if we were to spend a lot of days below this 200-day moving average, we might have started to erode some confidence in bullish fund managers that are managing billions of dollars and retirement funds. But continuously under the 10-period day average is more interesting to me than whether it's above the 200 or not. The 10-day moving average is the speedboat. This is going to kind of dictate, you know, what's happening in the short term. The 200-day is a big oil tanker versus the 10-period, which would be more like a speedboat, and that's the one I would prefer. Mm-hmm. So back to our example of Lyft. I mean, there's really no harm, no foul. Maybe we will get some positive buoyancy in the market in the next couple of days, and that'll help Lyft. Maybe it won't. Maybe it doesn't matter, because Andy and I were discussing new issues. They have their own supply and demand dynamics. What we had back here was a good old-fashioned exit strategy from all the people that have been long this thing. And this is what we call the bag holders, the people that have been using Lyft, and I love that product. And oh, I get a chance to buy it over here on the stock market on the open at $80. Well, sure. Then everybody that's been long since the stock was, you know, in the A series or B series private investment, they wind up taking their exit strategy. That turned to cash for them. And so this was a big event, and it happens a lot. It didn't happen with Pinterest, but it happened with Facebook when Facebook first came out. It happened to Snap horribly when Snap came out, and Uber, it happened to Uber as well. So once that supply demand imbalance gets taken out, then the price action starts to find equilibrium, and that's really all Lyft is doing here. It's just kind of building a base and then moving higher. So I guess what I wanted to do is not get ahead of myself and say watch what the market's doing, because I don't know if that really is going to matter. You're just going to have to base. Yeah. You're going to have to base the Lyft on its own price action. And what we talked about is now we have a nice 3 days above this 10-period moving average, Marguerite. I'm more interested in the price action following the guiding hand of this line, the 10-period moving average, which is now turning back up and crossed above the 20, which it had not been able to do for a while. And now it's starting to look a little more healthier. So what we don't want to see is a close. Maybe tomorrow it tested, I hope it doesn't, but if it tested it even today, that's okay. It tested it and bounced back up. What we don't want to see is a close below the 10-period moving average once we're in the position. Back here, this is just noise, but once we start to see something and take a position, that's going to be our guiding hand that kind of keeps us in the trade and keeps us alerted to what the momentum is doing, if it's dying out or if it's staying strong. All right, so that's that for the trade of the week.
I totally agree with everything you said, Steve, and he's right. These things are not going to trade. You know, I was surprised today too. I was like, whoa, you know, you've been holding up during that whole down move, and now we get a good, you know, and you look at that opening.
Nonsense. Nonsense.
Yeah, and especially I see Uber fight back and go to highs, and which I think I'm confident if Uber keeps the trajectory up, Lyft will soon follow. But we'll see what happens. These are two new issues, and right now it's all about price discovery. So
yeah, they're going to follow each other probably more than anything else that you would want to look at. And then the one from 2 weeks ago, you know, 2 out of the last 3 weeks, we've had a rough market, guys. The Newmont trade is outperforming. I mean, I was thinking the good target, you know, for this one would be somewhere in here, but boy, gold miners are off to the races, and we're going to talk about sectors. I think we're going to do that next anyway. Let's take a look. Yeah, sector glance. So, you know, last week we took a look at sectors, try to see if there's anything holding up or setting up. And if some of you regulars do recall, I'm going to take a humble brag lap here that, you know, I had mentioned that GDX was really acting kind of interesting down here. It was right here, and I couldn't break those lows, and the market was starting to get real defensive, and treasuries were running, and Andy and I both said, boy, you know, typically gold miners, money has to be buy something, money has to go into something, and sometimes gold miners can be a good defensive play. And if I zoom forward, I mean, geez, guys, there you go. Yeah. Should we start paying for these webinars or what? All right, enough of that patting on the back there. Let's do the same thing this week. And what I'm looking for this week is something a little different. I mean, everything got taken to the woodshed, you know, over the last 5 days, but I want to see which ones are having a nice bounce back. And by that, it'll be a couple things. Which ones are back above their 200? Okay, that's interesting. And back above their 10 period. Okay, semis might be ready for a pretty solid bounce. They had a nasty pullback, but just based on the moving averages and where they closed today, pretty decent. You know, then we got the airlines. They're way below their 200-day, so I don't really trust anything like this. This was a horrible neck snapping reversal for the shorts that didn't get out yesterday, and the airlines. And then we've got technology that's going to look very much like the Nasdaq, but same thing. Recovered from the 200-day and bounced right into the downtrending 10-day. Let's see what happens and see if it resolves. But that's, you know, again, the Nasdaq was strong, and I expect it to bounce back strong. The banks are still below their 200-day, you know, unlike technology above their 200-day, but the banks, they're kind of bouncing into a pile of mess here, so nothing really spectacular there. This is actually looking interesting. This is, boy, the solars are looking, we even, I remember last week, Andy, we marked this thing up last week with that wedge, remember? You're on mute. That's okay.
I do. Yes, I do. Yes, we both
And
love
it's
that little wedge there.
slowly, after all the nonsense we had in the other ETFs and the NASDAQ and the S&P, this thing is slowly trying to leave the station without anybody looking. This is probably the best looking thing I've seen all day right here. So I'm not going to go through solar stocks, but you guys look at your basket of solar stocks, and if you see something that looks interesting, the general backdrop.
Look at one real quick. Look at SEDG. I want to see how that did today. Yeah, I mean, okay, but nothing to write home about.
Well, notice that we have that set for an alert, don't we, from last week? It never triggered.
Yeah, never triggered there.
I think we're going to leave that one in there, and we might even just
sure
bring that one down.
Yeah, there you go.
Remind me not to delete that one when I get to that point.
Okay.
SEDG is right there. Okay, so we'll get rid of them. We'll talk about those first before we get rid of them. All right, solars look extremely interesting to me, guys. Nothing like everything else bouncing. For some reason, they're just hanging in there. Everybody wants to look at solars now. I get it. JKS, and there you go, breaking out of wedge there. SunPower. Nice day today.
For solar.
But, you know, they're all out there. They're a dime a dozen. There's solar stocks out there, but the ETF looks really good. All right, the Qs are going to look just like we saw earlier, bouncing. Actually, the technology spider is a little stronger than the Qs. Interesting. So I guess that just shows there is other stuff than technology. The XLK is the technology spider, very strong. So technology spider and solars, very strong. The Q with more weighting. Basically, all we can say about the Q is it recovered its oversold condition and did recover at least for day one here. It's 200-day. Interestingly enough, not like the S&P, it still had a little meat here on the bone before it meets its declining 10-period moving average. Kind of forgot to talk about that earlier. Home builders, not bad. Oops, home builders trying to bounce out of a range. They're back above all their key moving averages. That's notable. Not bad in the home builders. Retail, they've been hurting. Let's face it, they've been hurting. So it's just a relief bounce in the retail. It's nothing to get excited about there. There's the financials, just like the banks, just into a mess of moving averages. Nothing special there. Same with the broker dealers. Software, just an oversold bounce. IWM lagging in the small caps, and then we talked ad nauseum about the spiders and the current level. It makes all the sense that it stopped at today. Here's the steel ETF. Been getting crushed lately, so there's nothing more than an oversold bounce there. Still way below declining moving averages. Dow, we talked about that earlier. You know, the biotechs are just, they're dead. They haven't done anything. They've just been below the 200-day forever, and then below all their moving averages.
Yeah.
Interesting bounce. Almost looks like the gold miners over there in agriculture land. They had a big bounce 2 days in a row in agriculture. Healthcare spider still under pressure. Not really seeing anything major there. Well, this will be a China KWeb's a China ETF. I think we all know the news about China lately. So today is really nothing more than, I think, an oversold bounce on this KWeb stuff. Energy spider, just a downtrend, oversold bounce, and then we're getting into the oils that have been crushed lately. Gold miners had a great week. We talked about that. They gave a little, well, they didn't give a little back. They just didn't participate as much as the others today. Silver still in a bad downtrend, but bouncing up to the high end of the channel. More gold miners, and then gold, the actual ETF of the commodity of gold is looking a lot better. I'll just throw this out there, guys. Silver might want to try and play catch up to gold. You see how gold broke out of its pretty good downtrend there. It's quite possible silver might pay attention and take notice. But problem with trading these silvers and ETFs is they're hard over the weekend, man. You get a lot of downtime on the ETF.
Any overnight, yeah.
Any overnight, you know, Sunday night futures, and you're long SLV, and you can't trade it till New York opens, and the damn futures are heading down, and you're like, oh boy, this sucks. So that's about it. We're at the bottom of the barrel down here for the most part. So to rehash, home builders look okay, but what looks extremely interesting is solars and technology. Technology bounced really nicely, but solars are just really standing out there. And home builders kind of have a nice bounce too. Keep an eye on possible silver. Maybe it'll have a catch up with gold. Who knows? Time will tell. All right, so last week we set some alerts, and we'll just check in on those real quick. Price alerts. Remember, we set a couple of short sells, and I've got these sorted by, winning. Look up here. This was the day up here. We actually set an alert after that big kiss right into the 50. We set an alert right there on that green line. And look at that, the next day, everybody got paid if you took it. It's been choppy ever since. That was a decent one. What else did we do? Let's look at the other short, because I know it did good for a while. Look at this. It's this one here. We had this one pegged right into that big wick into the 200, and then it spent 1, 2, 3.5 days down here. That was some good alpha, but today gave it all back. So this was working for a little while. This short never really did a whole lot. Let's see, it triggered right there, and then it went positive against us and came back into the money barely today. So those are how the shorts did last weekend. The longs, Arjun popped, came back, and then gave some back today in terms of the profit side. And then this one worked okay. AJRD never really sold off with the market. And then we noticed earlier, this one, SEDG, we're going to keep that one. We actually lowered the price a little bit down here. So now I can come through and scrape out these, and we'll keep SEDG. We'll delete those 5. Time check here. Here we got time. All right, so let's start with, I only have one short, and I'm not going to go into all the scans. Are basically the same scan that we found last week, something that's bouncing up into an interesting level. We'll start with that. And it's this thing, KT Communications. Nice big, very topping tail looking wick, especially after on a day like today, and it's in a downtrend. We're going to set an alert to go short right at the bottom of that level, which would be 12.18. This is the same kind of notion as last week. Short fade for a day or two. There's one. All right, then let's go to the longs. First one I did find, let's see how it closed up first. ZGNX was on the trend change lubricant. I kind of like this. The only thing I don't like about it is it's had 3 green days running into today, but look at the tight range here. If this thing could break out, and it's on the trend change lubricant, so it actually has what we would call a short float of 23%, only 42 million in the share float, but 23% of them are short. And what do you think is going to happen to the short mentality if this extremely thin, long trading range gets broken? I think the shorts are going to panic. So I think this is the high wick right here. I need to go back and type that. Okay, ZGNX, the high wick is this guy at 39.59. So we'll go 39.60. And we'll remind people in the notes there's a short squeeze happening here. Maybe 1 to 2 days if it goes. Just try and catch a pop. All right, then moving over to the bull flag alert that Andy had created for some daily possible bull flags. This RCI does not look bad at all. And I'm going to use the high of today, I think. It looks like I might want to try and move out of this range. I'm going to use this high right here. What is that? Daily bull flag scan. Flag. All right, and then we did that one. I found one from Holly that I thought was kind of interesting. PAYS. Now, this is a newer issue. Look at this. The chart doesn't go back that much, and Holly saw something today. It's kind of a nice breakout of this bull flag that was just showing. So it was just a pure price action play. It averages 600,000. I think there's enough to play, but I'll make that known. I'm going to use this high right back here. It's just a few cents higher, I think. Let's see. 1066 there. Yeah, so we're going to go 1067. And again, this is a new issue. Might be volatile, so you can use smaller share size, but it caught my eye, and I would not have seen it if Holly had not traded it today. All right, so the remaining 3, I believe, are from the A table that I like to look at, and also the chapter that I wrote about in the ebook coming out. And so let's see, PAGs right at the top, staring at me in a dark color because there's 52% short the float. Half the people in this stock are short. and I don't think they're going to like it if it keeps going much higher. Now this one is it's not perfect in terms of the setup because it already broke out right there. So I'm going to express in the notes that this might be just good for a half a day follow through. I'm going to look at today's high here. 3350 is our number. Nailed it. Might only have half day run. Watch out for a reversal. The reason I say that is because I would count today as a really good day like a lot of other stock charts. And it broke out of its prior high back here. So there may be some nice follow through tomorrow, but that follow through could easily wane into the lunch hour. So be very careful about that. All right, and the last two I have from here, one of them is A Power. Pulled back and was repelled by that rising line, which it was is back, same back here. So that's even stronger, just like to the downside in Deutsche Bank and the other things. We got some daylight in here between the momentum line and the bottom edge of the price. It's extremely bullish, extremely strong. So I'm going to do the same thing here. Any follow through from today's high might be an interesting half a day play tomorrow. We'll go 59, I believe, is the number we want for this one. Maybe half day follow through before pullbacks. So don't get too cozy in these things. After hours got me, huh? Let's delete this one. Try again. We want to go after hours is 60, so we're going to go 60. We'll give it a couple of spaces and go 62. Let's try that again. Half day follow through, perhaps. Don't get greedy would be my note there. And I believe the last one is on here as well. Everybody's favorite is Roku. And Roku today looked like it yesterday and today, both testing that 10-period moving average. Roku still has decent short float of 10%, not a big short squeeze candidate, but the point is it is a 94 score. It's definitely an A student, and it's coming out of a nice bull flag here. I looked back 2 days ago, and this high at 74, and today's high at today's high at 72. 74 will go at 75, and that'll give us a kind of a running head start for possible move back to those all-time highs in Roku. Coming out of flag pattern. Strong score. All right, so there they are. 1, 2, 3, 4, 5, 6, 7, 8. If we include the one from last week, I'm going to go ahead and copy these while Scott gets ready to come in and talk about some promo codes.
You got some shorts
no! I just hit delete.
No.
I did.
Wait.
I start
confirmed
talking.
it? Oh.
I start talking and then I do something.
No.
All right. Let's try this again. How are we going to do this?
Just do it real quickly without notes.
Okay.
Yeah, just do it real quickly without notes.
What was that first one we had? SDG. What was it?
Oh, SCDG.
SCDG. Okay, guys. Shoot. That's what happens when I start talking. Okay.
There you go.
It's
They
the
don't have
second time
to.
I've
They don't
done
have to be precise. Yeah.
No.
Penny.
A power.
That's when you had to go a little bit higher, I think. Nope. Oh, you shorting that? Oh, they're coming out of short, Steve. You got to change them. Okay.
Are they?
Well, that one did.
That one did. God darn it.
No.
Yeah, I botched this one, guys. I'm sorry. So we'll go 62. But just remember, some of these high-flying follow-up ones, be careful. You know, half a day at the most. Roku we had in there. Roku.
And also the backdrop of the market. Keep in mind the backdrop
of the market, exactly. Holly was PAYS, that new issue. We'll go just a penny above. What else did we have? We had that KT was the short. That was the one short that I added in there. We'll go right there. That'll be an alert from above, and that did get coded as a short. Okay. And then Zagnax, ZGNX. We're going to key off of that one. See, that was that one right there. So we're going to key off of that bar. And the last one was RCI. You know what? I don't like this one as much. I'm going to cut that one. I'm going to keep that one out. I wasn't too keen on that one. Yeah, I wasn't too keen on that one. It's just running right back smack into resistance up here. So we're going to leave that one as is. Let's try this again. Share. Gosh, dang it, Steve. Copy. All right, so I'm dropping these price alerts into the chat window, guys. Trying to talk and chew gum and walk at the same time. Control paste. There you go. All right, so we ran out of time. We'll bring in Scott to talk about a couple of last minute announcements, but for those that want the information, there it is in the chat window for you.
Yeah, thanks. A couple items. We release podcasts almost every week, so be ready for the next one by adding the Trade Ideas Podcast to your subscription list. Just search for the podcast name, Trade Ideas Podcast, add us as a subscription, and check out some of the back episodes. Got some guests on there that are pretty good. Big news, we've got 3-volume new collection of ebooks called The Setup, and there's one on swing trading, one on active investing, another on range breaks and pullbacks. Each one's got a couple of chapters. I forget who contributed chapters to each one, but all of our team contributed some. So you just go to trade-ideas.com/setup, put in your email address to get taken to the download page, and you'll also get an email with the download links as well. So check those out. There's a code for this month, June Boom, all caps. It takes 15% off your first month or year of Trade Ideas. Those of you that are standard subscribers, y'all can also use this to do an upgrade. So keep that in mind if you decide to jump on the premium end of the platform. You can follow Steve on Twitter at TodayTrader. We also have at Trade Ideas. Facebook.com/TradeIdeasPro is the Facebook page to like and follow. And if you have any questions, the best place to send those is always the info@trade-ideas.com email, because that goes into our help desk software and gets routed to the appropriate team member to answer your question. Thanks, Steve. Thanks, Andy. Thanks, everyone. We'll get the recording up later on.
All right, see you next time.
Thanks, everybody. I'll see you on Thursday.